It's time now for top picks here on Market Call. Mike Philbrick, of course, has been our guest. The first top pick on this day, the Global X Gold Covered Call ETF, GLCC in Toronto. Mike?
Right. So I know there's always a demand for that income on the side of portfolios. And in Canada, we love these covered call writing ETFs. The nice thing here is we're writing a very interesting industry or sector, being it gold stocks, in that now we're going to have some beta from stocks because they are stocks. At the same time, having that gold exposure in the portfolio and covered writing it, I think, is a nice combination. Again, it's an active strategy for the covered writing. And you're covered writing those gold stocks, those large gold stocks, which have a little bit more volatility, so they give a little bit more sauce on the top for the income. So the yield is up in the 9 to 10% range. And while you're getting that yield, you're also getting exposure to a sector in gold where that has some unique contributions to a portfolio. It's a hedge against inflation. It's a hedge against monetary debasement. So there's a couple of things that you can, if you've got a position of gold in your portfolio, add some gold stocks, covered write them, get that extra yield in. And I think it's a nice diversifier, as well as being what's a pretty good sector. Gold's been on a bit of a tear, and it's funny, it's being accumulated in Asia, it's being decumulated in North America, which is just a strange set of circumstances.
Okay. A gold ETF is number one. Number two, the BMO Equal Weight U.S. Banks ETF, ticker symbol, excuse me, ZBK in Toronto is the ticker symbol of this ETF. Mike?
Yeah, and so this is an equal weight portfolio of the U.S. Banking giants here. We're talking about J.P. Morgan and Chase and Bank of America and Citigroup. And, this is an area of the market, and you can see as it's approaching some all-time highs, that benefits from economic expansion, and bank balance sheets benefit from rising interest rates. They actually collect an interest rate margin. And so this actually looks like a great sector if we have also an incoming regime that is more business friendly and less inclined for regulation. This area is looking pretty good. And if you prefer to have a covered written side, there is the ZWK, which will also take this portfolio and covered write it and get the yield a little higher. But again, I see lots of upside in this particular sector. And I think if you're looking at banks, you probably have lots of Canadian banks. It might be a nice thing to add.
Okay. Number three on this day, one that will no doubt be of interest to our viewers. We got all kinds of questions and have for quite some time on the Magnificent 7 tech stocks. This is the Roundhill Magnificent 7 ETF, ticker symbol MAGS on the NASDAQ. Tell us about this one.
So interestingly enough, the MAGS 7, obviously the Magnificent 7, Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla all combined into one place where you can buy it. And so high risk, right? 7 stocks, but these are the preeminent stocks in the indices. These are the ones that everyone's talking about, not the 493 other companies in the S&P 500, the Magnificent 7. So the way to think about this, one is that the charts look pretty good. Apple, maybe not so much, but generally both fundamentals and their technical patterns look like the bull market's going to continue in these types of stocks. The leadership did broaden for a minute, and then it's now narrowed again back into these large sort of tech giants. And so how do you deal with that as an investor or as a portfolio manager? One way is to get that extra exposure to this very concentrated market through adding the MAGS, right? So you're trying to keep up with the S&P 500. And it's been very difficult to outperform it because we have these 7 very large companies that are kind of dominating the performance. Well, one way to deal with that is just to buy those 7 in some small portion of your portfolio so that you're in it and you've got a little bit more of a slant in that direction as well. Wouldn't go overboard here, but it does look technically very sound and fundamentally very sound. So these companies look like they're going to generate a lot of cash flow, and they're going to take advantage of AI and the types of things that come along with that. It's pretty hard to not have something in this type of area, and in a way to kind of round out your portfolio too.
Mike, thank you as always for your time here on Market Call on behalf of our viewers.
Thank you.
Mike Philbrick was our guest. Let's take a quick look at markets before we turn things over to trading day here on BNN Bloomberg. There is a look at the S&P 500 up 0.8 of a percentage point, the Dow up by a full percentage point, and the NASDAQ Composite up by 2/3 of a percentage point. Thanks for watching Market Call. We'll see you tomorrow here on the program.